new to futures, or you're transitioning to futures, or you're new to the entire trading space in general, you're in the right place. Even if you want a refresher, even if you just want to be like, oh yeah, that makes sense that way, kind of hear it from a different perspective, you're in the right place. But I've found happens a lot with my own experience and also communicating with others is that there's a little bit of friction, a little bit of resistance, and then that thing stops us from pursuing what it is that we want to pursue, in this case, trading or investing, right? So don't let that little bit of friction, we're going to eliminate that together on these Wednesday sessions. So you're tuning in live, we'll also be posting the recording, and then you can go ahead and blast through them there. Okay, also, I want to invite you to engage with me. There are going to be some moments where I ask some questions. So just be ready for that. Don't be drifting. Don't be falling asleep. Don't be doom scrolling on the side. I know how distracting the world can be and our habits that are in place, but bear with me. Let's practice that discipline muscle. And I'm sure the future version of you is going to be really glad that you did. All right, so last week we talked a little bit about order types. We are going to do a quick review of that. There's two different types of order types. That sounded redundant, but there's two different categories of order types. There's the market execution, where you are buying and selling current price, current market conditions, real time, right? Easy peasy lemon squeezy. And then there's pending orders. Pending orders are where we set parameters for when and only when price reaches the price that we set. So we are in control. We're not in control of how price moves, but we are in control of whether or not we get into position for that desired price. Pending orders could have a limit on time or could be perpetual, often depending on the broker or platform. We talked about brokers and platforms last week. Everyone's a little bit different. Some have different rules. There's different regulations depending on where it is that you reside or you're located. And yeah, those are just like little details that make a big difference. So depending on where it is that you are tuning in from, you're going to experience different brokers and different platforms with some slight tweaks depending on those regulations of local laws. For example, some prop firms, which are not, it's basically a simulation of market conditions. They're letting you use that simulation to prove yourself as a trader. Those will close out your positions for you at the end of trading day. So if you're not using them, then your broker will probably allow your pending order to stay pending, like stay there in queue until it activates without it closing at the end of the trading day. All right, this is what a market execution looks like in CFDs. We have the entry price. This is a long on the left or buy. We have the entry price. The stop loss is underneath because we want it to go up. If it goes down, it is now going in the opposite direction. We want to protect ourselves. So can we say protect? Protect ourselves. Money, it has a lot to do with capital preservation. It takes money to make money, but if you don't have any, it's really hard to make it, right? Can we all agree? I'm sure we've all been there at some point. So let's preserve what we got so we can multiply it. At the top, we have what's called a take profit. A take profit, some people are in the habit of not setting one beforehand and then just kind of letting your profits float. We talked about that last week as well. A take profit is nice because you get to step away from the computer. Like, by all means, have freedom when you trade. At least that's what I believe in. Regardless, I am behind a screen a lot anyway, but setting these parameters ahead of time, it just gives us a little bit of wiggle room. It allows you to get up, to take your dog out for a walk, to use the restroom, for crying out loud. So you're not just staring, watching the candles print, which isn't that much more exciting than watching paint dry. For a sell on the right-hand side, we have the entry. Then we have the stop loss at the top, because in this case for shorts, we want price to go down. If it goes the opposite direction, we want to protect ourselves. We want to leave a little bit of wiggle room so that the market could breathe, a little room for error. Not all of our entries are going to be pinpoint perfect. So we want to leave a little bit of wiggle room so that the market can do what the market's going to do. But if our analysis is correct, then it should go to the downside in this case. If it doesn't, that's what that stop loss is there for, to protect us, to preserve our capital. And then we have our take profit at the bottom. Those are like the main three components of a position. Think of it as the anatomy of a trade. It's not just clicking one button, but you got to do a little bit more than that. Come on now. Now, market execution for futures is slightly different. There's a little bit of different terminology. If you're coming from CFDs, the idea should transfer over, same idea, right? But the terminology is a little bit different. So that's why we're going over it together, just to get us used to that and to eliminate, like I mentioned before, that friction of, oh, but it's different, I don't want to do it. No, we're not doing that. So buy on the left-hand side, you got your market buy, that means market execution. You have your sell stop, which is your stop loss. Excuse me, and you have your sell limits at the top, which is your take profit. We'll get into why they're named differently. You can use them interchangeably when you're talking to somebody, but regarding the buttons that you'll be pressing and the way that the interface looks, it's going to say different words, more likely than not. So that's why I want to make sure that you're used to the terminology so you know what buttons to look for. Because if you're looking for a take profit button on a futures platform or futures platform, you're going to feel a little bit lost, right? So this is why. Then we have the sell on the right-hand side. You have your market sell, meaning sell, market execution sell. You have your buy stop at the top as your stop loss. And we have your buy limit at the bottom as your take profit. Oops, someone's alert's going off. Okay, so feel free while we're doing this to take any screenshots that you want, ask any questions. Remember, this is supposed to be interactive so that we can clear out any doubts that you have lingering. So this is a visual representation of pending orders. Also, this is going to be a little bit repetitive, but for the sake that after today's call, like we got it out the way. Okay. So a buy stop is when you're going in the upward direction and you want it to keep going in the upward direction, and then it will activate your pending order. Remember, the pending order is a category. It means it's pending, it's not yet active. So a buy stop, once it reaches this certain level that you set and it's already going up, it'll activate. Versus a buy limit actually means that you want price to drop down before getting into a buy position. So you still want it to go up overall, but first you want it to drop down a little bit. Now, why would people want that? People want to use buy limits, or the idea of buy limits exists because there's these things called discounts. And the market moves in ebbs and flows, right? Like waves. So with enough analysis, there is a way to have a higher probability of knowing if the market is going to drop first before going up, in which case, like I mentioned before, it would feel like a discounted price. Example would be, let's say that nothing is 100% certain, right? But let's say that you had a really good feeling based off of your analysis, not just a guess, but an analysis of the market. Let's say that you had a really good feeling that the housing market was going to drop, but later on it would go up. Your conviction to buy a house would be higher because you have that analysis in front of you, right? So it's kind of a similar deal, except that the timeline is significantly shorter because we're working with transactions that can happen within minutes type of deal. Now, for sells, we have a sell stop, which means that price is already falling and we want it to continue to fall. So it's going in the same direction. And once it hits that level, then it'll activate the pending order. For sell limits, it's the opposite. So for sell limit is you want it to fall, but first you think it's going to go up just a little bit higher. Well, I don't know if just a little bit, but you think it's going to go up a bit more before dropping. So let me know in the chat if you're following along. Just give me a head nod, some emojis, whatever you feel. Let me know that you're sticking with me. That way we can continue. Clear. Beautiful. All right, now this is what it looks like with candlesticks, because I'm a visual person, so I made a time to talk to my people that are visual learners as well. Sometimes lines just confuse me. I don't know if that's just me, but candlesticks, again, price is going up, and then once it hits that level, it'll activate your pending order. Buy limit, price is dropping down. Once it hits that level, it'll activate your buy pending order, which is your buy limit. Sell stop, bottom left, price is dropping. Once it hits that level, it'll activate your sell pending order, which is a sell stop. Your sell limit, price is going up. You want it to go up a little bit higher, but overall you want it to drop. And once it hits that price, it'll activate your sell limit or your pending selling order. Yeah, you guys know what I mean. Again, buys. I told you it's going to be repetitive, right? Stick with me. Buys. Price is going up. Got to go up a little bit more, hits that price, and then you're active. Buy limit is price is already going up. You actually want it to go down. Once it hits that level, you want it to go to the upside. So last week we brought about the question, so if we want to have the best price possible, then why do we even use buy stops? Let's just go back a couple of slides here and look at the terminology for futures. If we are in a sell and price goes up, in order to cancel out a sell, you have to put in the opposite position. So for sells, the opposite position would be a buy. For a buy, the opposite position would be a sell, right? So notice here, let's go on the left-hand side. If we are in a market buy, this is futures. If we are in a market buy, there's two ways to get out, either at a loss or in profit. I guess technically break even too, but that's whatever. So if you're in a buy, the opposite position would be a sell. So you have your sell stop and you have your sell limit. Your sell stop, you're going in the direction that you were already coming in. A sell limit, you're going in the opposite direction. Following? For sells, the opposite position is I feel like Dora. Do you spot, what's his name? The fox? Buys, exactly. So if you're in a sell, the opposite position would be in buy. A buy stop would be your stop loss because that goes in the opposite direction. And a buy limit would be your take profit because that's going in the same direction. Okay. So that's why we're using the buys. Last week, I mentioned how I don't really use buy stops when I was working with CFDs. It just didn't fit my plan, didn't really make sense to me. So I was avoiding them altogether, just didn't need to use them. I wouldn't say avoiding, I just had no use for them. Once I transitioned into futures, I have a use for them as my exits. Beautiful. Now pending orders as buys with the visual representation, like I just mentioned, it didn't make sense for me to use buy stops before because the risk to reward ratio wasn't worth it. So in this case, the red represents your stop loss and the blue represents your potential gain. So if I were to use a buy stop, from what it is that I know about charts and reading charts, I should say, I would usually put my stop loss at the previous low, at the local low. In this case, that's down here. So notice how the red and the blue are almost the same size. That's a 1-to-1 ratio. That's okay, but it's not optimal. So it's kind of like taking, let's say that we take 10 trades, you win one, you lose one. You're taking one step forward, one step back. And we're not in control of which trades we lose because we're not in control of the market, right? We do our best to make a proper analysis and raise our probabilities of being right. But at the end of the day, we can't tell the market what to do. So like I mentioned, it's never going to be 100% certain. So we don't know when those losses are coming. And let's say that they come at random. You win one, you lose one, you win one, you lose one, you win two, you lose one, you lose another one, or you lose two. It kind of feels like you're like dancing in place. You're taking steps, but your displacement doesn't move up very much. That's how I feel about 1-to-1 risk to reward ratios. Personally, I feel like you have to be really good at your analysis for that to even be worth your time. So when I say in the future, I'll say something called win rate. If you want to write that down, your win rate is how often you're right, and it's in a percentage. So let's say that we take 100 trades and 76 of those trades are winners. Your win rate is 76%. I used 100 because I think it is smarter to use a larger sample size than a smaller one. If we use a sample size of, I don't know, today's Wednesday, I think I've taken 3 or 4 trades this week. So if I only use this week's sample size, it's not enough. It could be a weird week for me personally, like I could be off my game. It could be a weird week in the market where it's a little bit extra volatile because of news or etc. Like it's just not a big enough sample size. You don't have enough case studies to actually create like a real thesis, if you will. So using a larger sample size gives you a more accurate win rate. And then, I know I'm going on a little bit of a side tangent, and then that win rate could help you narrow down what type of risk to reward ratio is best for you. Because the beautiful thing about trading, and you'll hear me say this a lot, is that it is customizable to the trader. Trading is all about you and how you perceive the market, how you risk in the market, how you get out of the market at either a win or a loss, and how often you do the above. And I'm sure a few other things. So there's multiple variables, right? It is, but it isn't a one size fits all. It's kind of like an overgeneralization. I like to say that trading is kind of like food, where it doesn't really, or I should say, investing is kind of like food, where it doesn't make sense for people to say, I don't like investing because it didn't work for me. That's kind of like saying, I don't like food because it didn't work for me. We got to get a little bit more specific than that, right? There's so many variables and so many different ways to customize it to your palate that that's a really unfair judgment. So if you have that previous experience of maybe getting burned by the market, losing money, getting scammed, etc., I do invite you to try it again and really try to fine tune, find what you like, narrow that down, and then eliminate what doesn't. Trim the fat. Okay, side tangent. That had to do with win rates. Now let's bring it back. So for a 1-to-1 risk to reward ratio, you need a really high win rate. And that will be a session that we do entirely dedicated to finding out yours. I think you need an 82% win rate or higher. So don't quote me on that, but I'm pretty sure. By limits, I do enjoy, especially when I was coming from CFDs, but that also transfers over to futures because it allows me to get those discounts. The same way that I was talking about earlier with the market, Yeah, if I have a decent understanding or I think I know that the market is going to go up to certain price, let's say 100 for simple math sake, and it's currently at 60, well, I'd rather get in at 60 than get in at 90, right? Because if it's going to meet 100, or if I think it's going to meet 100, then I have all that difference in between as profit. Making sense? So that's why I really like limits. But I do have a new, well, we all do have a new use case for those buy stops and sell stops. Clarification on futures. So the only way to close your current position is to open an opposite position. It's not as simple as hitting a take profit or stop loss. Correct. Another way of closing your position, Noah, would be clicking the X that's on your open trade. Or I guess it could be pending too. But once you take a position, um, then there'll be like a little X next to it and you can cancel it. So whatever you're at, whether it's hasn't activated yet or you're in a little bit of profit or a little bit of drawdown, the only other way to close that position would be to just cancel it altogether and it will take you out exactly where you're at. Yes, it was swiper. Okay. Sells, same idea. So if price is coming down, once it hits the zone, it activates you in the direction that you want it to go. Sell limit, price is going down. We actually want it to go up first because that betters our chance of having a more lucrative risk to reward ratio. Same concept as before. You get more bang for your buck, if you will. If we're already going to go to that price anyway, I'd rather have a larger displacement because that difference in price is where we make our money. And then another visual, sell stops, big risk to reward. I'm sorry, low risk to reward ratio because you have a bigger stop loss. And then sell limits, you have a tighter one. So it just pays better. Obviously, you don't have to have this big risk to reward ratio or this big stop loss, I'm sorry, when you have a sell stop, but from my way of assessing the market, that's how I base my exits, my stop losses is I base it off of the previous high or the previous low. If I'm in a previous high, if I'm in a sell, previous low, if I'm in a buy. And we'll get over exit strategies in the upcoming weeks too. So remember, today what we're doing is just knowing which buttons to press and for what, or which parameters to set and why. In the upcoming weeks, we'll be going over the strategy behind choosing those parameters. Okay, so limits. Limits are when prices are going in one direction, you want it to temporarily go in the opposite and then continue in that same direction. So buy limit, price is going up. We want it to drop first, activate us, and then continue to the upside. So we have our limit buy, and then we're going to set our price. We're going to, once that limit is set, then literally the next thing that I do, so if you're taking notes of like how to take a trade, first thing that I do is the assessment, right? Let's analyze the market. We're not just going in blindly. We're not like, let's see what happens, 50-50 chance, right? No. So we're analyzing the market. Then we're deciding if I'm getting into a trade or not at all, because you don't have to. And then once I do decide I'm getting into a trade, I will put in my limit if we're not at that price. Immediately after that, I put in my stop loss. So if we're in a buy, I put in my sell stop. And then if we're in a sell, so moving over here to the right-hand side, If price is dropping, we want it to go up temporarily, but then continue to drop. I make my assessment, of course, set my limit, in this case, my sell limit at X price immediately after, so I don't forget. The reason is I don't want you guys to walk away, or sometimes, we have some goldfish tendencies. I speak for myself, but I'll look at another chart and say like, okay, what's next? So this allows us to protect our capital in case those tendencies come in. It's okay to look at another chart. Again, you don't want to be glued to the same chart, staring at the candles print. I've done that. It is good exposure therapy for taking losses. I will say that. But besides that, it's not very exciting. So immediately after I set that limit, I'm setting in this case, my buy stop as my protection, right? Then I can go switch tabs. I can get distracted. I can open my phone. I can live my life. And I know that worst case scenario, that stop loss is there to avoid me losing even more than I have to in the event that it doesn't go in my direction. All right, guys, I know I'm repeating a whole lot of very similar terms. So this is why I'm being so repetitive, is because repetition is the king of learning, right? Again, really encourage you guys to screenshot this or watch the recording, because it's really annoying that the terminology is so similar. At least my brain thinks that way. Like buy limit, buy stop, sell stop, sell limit, pending order, stop loss. Like it all sounds very similar. So I don't want that to be the little friction to stop you from moving forward. Let me know if everything sounds smooth and we'll move on. Limits for sniperlicious entries. Exactly, Tia knows. It's so similar. I know, I know. Who does this? Who chooses this? But that's why we're going over it in more ways than one. I got pictures in here for you. I got screenshot friendly images for you, and the recording will be shared too. Okay, let's see, let's see. Easy when you're explaining it. Yay, beautiful. So real quick, because I'm gonna be asking you guys some questions coming up, okay? So real quick, remember, let's go back here. Remember, let's look at the, how do we want to do this? Let's look at the top half of the screen right now, just the top half. So if we're looking for buys, the buy stop goes through it. The buy limit bounces off of it. Yeah? Now bottom half. The sell stop goes through it. The sell limit bounces off of it. So you can think of stops as like rolling stops, like stop signs. Stops means that it just keeps going. It doesn't actually stop. So maybe that's not the best way of thinking about it, but I'm trying to help you out here in terms of association. What can you visually think of to make you remember what a buy stop and a sell stop is? Limits, we're bouncing. Okay. All right. So where were we? We're talking about limits. Already mentioned this, but we can go over it again. Buy on the left-hand side. We use these order types for protection and also, best case scenario, for locking in our monies. We want to make sure that even if we're not looking at the computer, if we do step away, if we gotta tinkle, if we gotta walk the dog because she's crying, that if our assessment is correct, it is locked in without you having to be glued to your screen. So these things are super, super useful as long as we know how to use them, right? Let's use our resources. So one more time, price is just about at entry. We press the button. In case price continues to fall, we already have our sell stop there. Remember, it's already dropping. It's going in that direction. It's a rolling stop. Hits our stop loss, in this case, our sell stop, and we're good. We might have lost a few bucks, but it could have been a lot worse if price continues to fall. And that happens. Like a few days ago, I think it was Monday, between Was it Friday? I don't know. In the last like 3 or 4 days, trading days, the commodities market has dropped like 30%. And commodities are supposed to be relatively, I wouldn't say stable, but like people trust them. You know what I mean? So they're not supposed to be that, historically speaking, they're not supposed to be that volatile. In these markets, anything can happen. I feel like I've seen it all. Obviously not, because I've only been in the markets for 8 years. But we've lived and traded through pandemics, recessions that weren't technically recessions, inflation, hyperinflation, market crashes, market halts, and whatever the heck gold is or silver is doing. So like it's the wild, wild west out here. But as long as you know like these basic things to do, you're gonna be okay. And it actually kind of gets a little bit fun because it's kind of like you're playing a game. Okay, so in the event that price does not go in our direction and we are in a buy, we're protected. In the event that price does go in our direction, we are in a buy, and I decide to walk my dog because she's crying, it's locked in. If we are somewhere in the middle, who can tell me what happens? Let's say that price is right here where my cursor is. What happens? Not quite. So yes, we could expect a healthy retracement for sure. Remember, the market has to breathe. There are waves. You wait. Yes. So if the market is somewhere in between, it hasn't hit your sell limit or your sell stop, then we're just floating. Remember, profits and losses are floating. They are not real until they have been realized. One more time. Yes, you are protected either way. So unless your pending orders have been hit, then your floating profits or losses are not real until they have been realized. Realized meaning that the order has been canceled with the opposite order, or you click the little X. So it's not going to cancel itself unless it's market close and you have one of those brokers. So for me, market close is like 3:10 Central Standard Time, and my orders will just get closed. But other than that, let's say if I set a trade at 8:45 in the morning and the market's just going like this, which sometimes it does. It's just printing out little candles, not really going anywhere other than sideways. If I come back at 2 p.m. and it's still chilling, it's still floating. So that's where me as a trader would choose, okay, do I just let the market close me out on this? Or do I close it out manually? Or do I just wait for it to see if it hits before market close? You are protected either way. I also noticed Mike moving to break even once he notices price staying at a new stable structure inside his take profit zone. Yes, that is going another level. So in the upcoming weeks, we need to learn market structure. We need to learn how to read charts, the strategy behind taking positions. And then there's multiple components to trading, like I mentioned previously, right? Like the little nuances, the variables that I mentioned. In a trading plan, or let me backtrack one more step. Let's take a step back. Trading is not just taking an entry. It's not just taking a position. Trading, what people actually mean to say, or what I think they should mean to say, is a trading plan. Just the same way that we know that cooking doesn't mean just turning on the stove, right? That's just one part. Getting healthy doesn't mean just showing up to the gym. Like there's a little bit more to it, right? So when trading, it's not just getting in, but it's also how you manage that trade. So we will get into moving your stop loss into profit, trailing, going break even, all that stuff will come in the upcoming weeks. Absolutely. Okay, Nancy, so if I'm understanding correct, for futures, I can execute a trade, let's say a buy. I'm not watching it like you said. I would have to set a buy stop, correct? And the opposite, if it's for a sell, it's a sell stop. Okay, so if you set a buy, your exits are going to be sells. Steph. So if you're in a buy, notice how your stop loss is a sell, your take profit is a sell. It's just what type of sell. If we're going up, then it's a sell limit. If we're going down, then it's a sell stop. And then for sells, the opposite would be buys. So your exits would be buys. Let me make sure that. Let me know if that makes sense, Steph. So your cancellation or your exit of the initial trade that you took is going to be the opposite. What alerts does he have? Yeah, these sessions are every Wednesday that I can show up. Wednesdays, 8 p.m. Central, 9 p.m. Eastern. And then the recordings are often shared in these, or should be shared in the school. And I'm getting a little bit better about posting them on YouTube, you know, for my 4 viewers. But just so it's there. Okay, that makes sense. I'm on my phone and without glasses, so it totally. Okay, perfect. Yeah, just tune in to watch the recordings. I can also share the presentation later. All right, moving on. It's quiz time. Told you to pay attention. I told you to take screenshots. Yeah, that's it. But let's see how many of you were paying attention. At the end of this quiz, you will be graded and kicked off the boat if you fail. I'm just kidding. But you'll get brownie points or bragging rights, whatever. All right. Let me know in the chat your answer. Giving you a little bit time to think this through. Y'all didn't think there was a quiz, huh? Okay. So if price isn't quite where you want it to be, what type of trade can you take? A, market execution, B, a take profit, or what's supposed to be C, a pending order. And the unanimous answer in the chat is a pending order. Good job, guys. It is going to get a little bit harder than that from here. I feel like who wants to be a millionaire? All right, so whoever got pending order, good job. Next, for a buy, what do you use for an exit in profit? So buys, you want it to go up. What do you use for an exit in profit? A stop loss. B, a take profit. C, a pending order. Or D, a sell limit. Míralos. Yeah, okay. The answer is D, a sell limit. So far you guys are crushing it. Let's see how this one goes. For a sell, what do you use for an exit in profit? A buy limit. B, a sell limit. C, a sell stop. Or D, a sell limit. You see, like this sounds confusing. Okay. I wonder if you guys are just taking like somebody else's answers. The answer is a buy limit. Beautiful, guys. Crushing it. All right, I think this is the last one. For a sell, what do you use for an exit when the market isn't going your way? Is it A buy stop, B, a sell limit, C, a sell stop, or D, another sell limit? Oh, that's funny. Okay, let's see. I think there's an A, there's a C. A, C. Looks like we're torn here. C, A. What is it? Okay, so if we're going for a sell and our exit that is not going in our direction, going for a sell, our exit is not going in our direction, we want to put in a buy stop. So it's not going in our direction, right? So it's actually not dropping anymore. It's going up. So it's going to roll through that stop and roll through our stop loss. And it is what it is. So yeah, they get a little bit confusing. So that's why repetition, studying, taking notes, it gets easier with time. Well, I should say it gets easier with repetition. Almost got me there. I know. I did that intentionally. All right, guys. So that does bring us to the end of our session. I hope that you got something from today's session. I know a lot of it was repeated. Maybe some of you guys are beyond this already. You're past this. That's good. Great for you. Glad that you're here anyway. But I do believe that repetition is a great way to really learn something. Consider saving this video, downloading it, or just saving it in some type of queue or playlist once it's up on YouTube. And if you're not already in our free community, there is a QR code at the bottom for you to join. Not really sure how you got to this call if you're not in there, but we do these sessions on a weekly basis. Mike also goes live Monday through Friday for about 2 hours, all of those days, analyzing the market live in front of you, real market conditions. Like, we're always looking for ways to give more for free. Like, what else can we give you guys? How can we eliminate all your possible excuses? And not because they're your excuses. Trust me, your excuses aren't special. A lot of people actually probably have them, which is why we're trying to find solutions for them. Also know that we have a store, a virtual store, tradetopia.store, where you can download a lot of freebies. So if you don't already have your futures cheat sheet, I'd consider downloading that. In the last few days, so many of you guys got the futures cheat sheet and a few other resources for free in there. So I'm glad. Now it's just a matter of putting it to use. And last but not least, we are on a mission to shift the sentiment of trading and steward our skills so people have a fair chance of succeeding if they do wish to continue. I know that trading has sometimes gotten a bad rep because other people have done it in a not so profitable way, not a lucrative way, or it got merged with another industry. Maybe it wasn't represented the best way possible. We've taken it upon ourselves to shift that sentiment, shift that perspective by giving it away for free. We got nothing to gain from you guys being here other than like sometimes we make friends with you guys, which is pretty cool. Like doing this together is awesome. Actually, that's not true. We do have something to gain. And I mentioned this in a call on Saturday that I do with our personal development book that just sold out. So happy about that. But I do have something to gain from you guys. And honestly, it's as cheesy as it sounds, it's inspiration. I think, truthfully, being honest here, trading is kind of boring sometimes, but doing it with my favorite people, seeing you guys grow, evolve, like, is dope. It makes it more fun. It keeps me coming back. Sometimes I've taken breaks and just considered, oh, maybe that's not for me. And then I come back and you guys send me messages and you're like, thanks for teaching or thanks for breaking it down so simply. And I'm just like, I should keep doing that. And here I am. So thank you guys. Yeah, check out the store. Thanks for being with me. Thanks for taking your time. Thanks for wanting to be better and like mastering the skill set. I mentioned previously that I think that trading is boring, and I do, but honestly, it's one of the coolest things that I've ever learned because it's taught me so much about myself, and I've changed basically the perspective that I have on psychology, money, and the world, which are pretty big components of our perspective of the external anyway. So you're in the right place, and I believe in you. So have a great night. I'll see you tomorrow for New York session.